Did you just hear what she said? That liquidity would have been 100% held for that collateral purposes. But because of SLR, that would no longer be required. That is a critical sentence for what we're doing and why it works. Now, regarding the 2013 regulations put in place, look what happened right after those regulations were in place. The repo market went up. So you think this is all coincidental? Hell no. The repo market is keeping the market alive, and it is the only thing left keeping it alive. March 31st, 2020, market was starting to crash. SLR came and saved it, and then we had free leverage, and you heard what she said. They could take up their liquidity, free it up to invest it in risky assets. Leverage goes skyrocket, and then we hit SLR ending. What happens when SLR ends? On April 1st of last year, the repo market skyrocketed to all-time highs never before seen in the history of finance. And the market, instead of going up like this, starts to trade a little bit more sideways. That's because we have a bailout through the repo. But the only key difference between SLR and the repo is that a lot of their liquidity is tied up for collateral purposes. Although the Fed Reserve does give them somewhat of an SLR benefit because they can repledge securities and whatnot, it's not as effective. That's why you don't see the market going up as much. It's been more sideways. That is why it's more cyclical. You can make money off of cyclical stuff in the markets. They are tied right now. They don't want anyone to know it. They don't want anyone to realize it. Everything's fine. Inflation's transitory. No. Because guess what? The banks would have crashed too. It all would have came down if it wasn't for SLR. And the only thing that's extended on a SLR is the freaking repo. It is the heartbeat of the market. It always has been. Since 2013, it's been the biggest thing in the market is the repo market, the Fed rate, and making sure it's all good. It's not good right now. And when, as you can see here, when SLR ended, boom, there it goes. And we're sitting at what, $1.6 trillion now in demand? Yeah, there's money to be made. Why this happened? Remember the regulations. Banks could free up their liquidity to lend to other banks and buy up risky assets. Now they cannot and must use the repo market to do this, which functions as one gigantic lending operation with the Fed as central counterparty. That is why this strategy works. That is why their hands are literally tied, because collateral crisis is the real problem. What comes after the repo demand subsides? Don't worry, I know exactly what's going to happen. It's going to be a controlled bear market through the Securities Financing Transaction Service offered by the NSCC that we're waiting on that should be into effect by March. What timing? So, this is your SFT approved line here, around 4-1 of this year. This is your SFT floor, where I think the market's going to go in a controlled fashion. This is the NASDAQ. I think it's going to go down to about 10,500, make for, good 25 to 30% correction, which doesn't sound all that out of the ordinary for, a year of deleverage. The deleveraging's got to happen. It's got to happen, and it's going to happen in a controlled fashion. Historic money to be made. And there's a lot of people coming up acting like they know what's going on all of a sudden. So keep that in mind. It's all about the repo.